Hello, everyone. Welcome to State of the Market. I am David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. And it looks like we are good. Everything is live. Great to see everyone. I'm going to show some disclosures to start. I'm going to share a few more things in the chat. So now we often discuss ETFs in this. In fact, we almost this State of the Market really looks a lot at the sector ETFs. So we do want to just mention that there is the prospectuses that is in the link that we provided. It's this year, but we also put it in the link. And we will next show you some standardized returns for those ETFs. Okay. So these are standardized returns. Now, if you want to go to tradestation.com and click on the Insights button at the top, you will actually see um, the blog post, our Market Insights blog, and on that blog there's an article, and there's a few interesting things about the S&P 500 in that article that we are going to be touching on. You might want to take a look at right here. If you go to TradeStation.com, click on Insights. It's this article with the robot looking at the stock market feed. This one right here, and it just kind of says it all. As well, my point is that in some ways, Nvidia reports earnings this week, and but in some ways, the bigger story could simply be the fact that we now have a Fed that's pretty clearly communicated a more dovish stance, and we have an interesting shift in market behavior that we're going to be talking about, market sentiment, some of the price action we're going to be getting into now. In fact, just to highlight that very quickly to show you here on the TradeStation platform, I create this little page. It's interesting. Look at this to start. So this is the overall S&P 500 just today. We can actually see the S&P right now is down about 0.5%. But if we look at the overall index, we can actually see that more than half the stocks are positive. What's also interesting is we go to our MT breadth, and this is something we share in our market trends webinar on Thursday if you want the zip file for this. But basically, we have 92 stocks in the S&P 500 making 52-week highs, which is the same level as back here in mid-July. So it's interesting to see more stocks making new highs. The advanced decline line, I think, is down a little. No, it's new high again in the advanced decline line. We have 450 companies above their 20-day moving averages. So, I mean, this kind of thrust that we've seen here in terms of this breadth of short-term strength, when we see thrusts like this of breadth, it has had a history like back here in November or of being of continuing. And so what I've been kind of thinking and thinking is sort of a status or a situation we could see is we could see a sort of tight consolidation essentially as we've seen at other moments. If you look the way the market behaved here, rally, tight sideways move, and continuation. So what I'm now wondering about is if we see with this rally and this strong breadth here, here, and here, if we now see a tight consolidation followed by new highs. That has been the pattern in this market for a while, and I think we have to at least kind of recognize that has been the case. Very quickly, I can look at the overbought, oversold charts we have here. Like this, for example, is the S&P 500 daily, hourly cash with the RSI, and it's interesting to see. When it's at an bought or oversold condition, it went to an overbought condition here, but now it's at a spot where it's kind of much more neutral. Now, I'll also point out that the big thing in my view was this August 1st. This was to me really the key thing. The high on August 1st around 55.66. Look at last week how we came down and just held that. You can see that on the hourly. So now we have potential support at old resistance on a major reversal day. This is August 1st. This is hourly, but this entire, basically range here all the way down from this. This is a huge candle that day. That was a bearish outside day that sent the market to new lows. And now to see us holding it as potential support on was it Thursday? It was last week here. I can't remember which day we tested it. But anyway, the key thing is that we held. It was Thursday that we tested it, and then we bounced on Friday. So the key thing is seeing new support at old resistance. That is a pattern. So now we're going to quick jump over to some of the big charts that we like to look at on this webinar. This webinar, remember, is dedicated to mostly weekly sort of charting. But the last thing I'll mention is it's interesting to look at different sorts of of value indexes. Different things. There's various value ETFs and indexes that are out there, and a lot of them closed last week at record weekly closes, and the growth did not. So what we're really seeing here in many ways is we seem to be seeing evidence on the weekly chart of significant rotation towards cyclicals, towards value, away from growth, and there's a potential for that maybe to last for a while. So let's just take a look very quickly here at we're going to just start the S&P 500. So really here we have this same level, the 55.66. You can see this was the previous record weekly close, and we closed above it. This pattern has been a bullish signal. Now, I do think the problem with the S&P here is that it's so heavily weighted to the mega cap. So I think at this point we're actually at a spot here where the S&P is behaving more and more like the Nasdaq. But still, I think it's important to realize that that was a signal that has worked repeatedly. We often see a weekly closing high, a period of weakness, and then continuation. Look, for example, what we saw in something like, not the utilities, but something like something like the real estate had these weekly closing highs, then a breakout. Something. I mean, we talked about this different times. Healthcare weekly closing high, one bad week, and then continuation. So something like this with the S&P, that would be consistent with this kind of period here. I'm sorry, 55.66 was that low from August 1st that we held last week. So at this point, if you look for similar patterns, it could kind of just consolidate here and hold and not do very much of anything for a period of time with the potential for continuation. Of course, we are in a holiday week, and we have NVIDIA earnings on Wednesday afternoon. We have a GDP revision on Thursday. All these things, I'm not really sure how much they massively matter because, again, we are seeing evidence here that the market, like we said in this article, we're seeing evidence that the market is now moving on to the next thing, which is rate cuts, which is value, which is cyclicals, which is potentially small caps, financials, M&A, that entire narrative. Just today, we see activist investor in Southwest Airlines. We saw activist investors making things happen in this company like Starbucks. So I think overall, we have seen a different kind of market than something that is just dominated by pure, growth, and that's something we've talked about for a while. So the advanced decline line made a new high, and then I just want to make sure I covered everything. All right, next, the Qs. So now to me, this is something where now we're just in kind of purgatory here of chop, chop, sideways movement. That is really what this looks like here because we have a high from back here the week that began July 22nd. You can basically see hit that and stalled. Now we're trying to hold the low from last week. In my perspective here, this is a kind of tricky area because this is not very much of a low when you really look at it. It's not much of a pullback. So from my perspective here, this could now enter some periods of just kind of painful sideways movement with people pushing it down and range bound movement, very short term sort of ups and downs. So from a weekly perspective, in my view, this lower high at this other high here is a problem if you're bullish. It's also right here at this tight consolidation level from back here right around 440. I'm sorry, 480 on the Qs. So basically seeing it hit that level and stall is potentially not a great sign. So I think Qs here are at a spot where they have that. Now it's also interesting to look at the stocks, the Philadelphia Semiconductor Index, very similar. Look at this low that we had here on that last week of June, and look at how it now becomes kind of a high. This level here around 53, 51 on the SOX now is potentially, I think, kind of tricky. Also, little inside week here, but again, this thing where it's had making that lower high on the weekly with, after a nice bounce, potentially significant, space here for some kind of move, kind of back end filling. Now, I want to be clear that, overall, when you look at this can be something that is simply a period of a few months or something like that of sideways movement. And if we were to have some kind of period of just consolidation, it would also fit in with the timeline of getting to the Fed meetings, maybe getting to the election, and then something like that. So we could be in a spot here where we're setting up for essentially a period of value investing, a period of small caps, and then at a certain moment in time, a kind of year-end recovery in the mega caps. That might be what the price action is telling us here, but it could be a few months of volatility and of range-bound markets. All right, so that's the SOX. Dow Jones Industrial Average had a weekly record closing high last week. And I think when you look at it again, after a move like that, some tight sideways consolidation with potential for upside might be what people look at if they're looking for just pure, you're looking at the technicals. Now, the Russell also here continues to be kind of interesting because the Russell here has space back to where it was in 2021. I mean, it's still more than 10% below that old high. So that's kind of interesting to see how it held those double lows there, and then the held the lows from June when the other indexes pulled back to their levels from May. That is something that's kind of interesting here. So I also want to emphasize this ratio of the RUT versus the NDX, the Russell versus the NASDAQ. You can see that this has been in a downtrend for many years, really. It's interesting just look at this on like a monthly. Just really quickly, you can see this is when basically this is when the dot-com bubble broke in 2020. You can see that basically from June of 2020 through like July of 2006, I'm sorry, 2000 to 2006, we had this big rally in the Russell. And this was a period of time when people moved away from the big growth names and they moved to value and all this other stuff. And then we resumed this longer term downtrend. So the fact is that this is a long-term trend towards technology and everything else. But the thing here is that it could, if it were to have a period that even looks like this. Remember, this is a monthly chart. Even if it had a period like this, right? That is entirely, something that people might think is possible. And if that were to happen, that could be a few months of outperformance. That might be all it takes to see a sort of move back to the highs on the Russell. So I think it's important to realize here, if I go back to the weekly of this ratio of the Russell versus the NASDAQ, you see this big surge. It went to a record low at the beginning of July, and then it exploded higher after that strong CPI, and now it held a 50% retracement. All right, so to me, this is something that gives some sense that this thrust is validated by holding the 50% retracement. It's also validated by the fact that the Qs are down 1.3% today and the Russell is marginally positive. So also by the fact that it held those lows from June when the NASDAQ went lower. So a lot of these things seem to be consistent with a period of a few months of weakness in large cap growth and a few months of relative strength in small caps and value. Doesn't have to be the beginning of a bull market in small caps or anything like that. It can simply be a period of the market kind of normalizing, this ratio normalizing, kind of maybe going back somewhat up to something. I'm not going to try to make any kind of predictions, but simply a period of this kind of not going down for a period of time. And then at a certain point in time, a return to the mega cap sort of thesis. All right, so the right here we're looking at a 10-year Treasury. From my perspective, this is something we talked about as being very important, but it also this is the way it's just kind of sitting at this level. You can see down here basically 3.8. It bounced there so sharply in December, and now it's sitting there. From my perspective here, when you look at something like this, when you consider what the Fed is doing and everything else, people might be thinking, there is space to the downside. 3.25 is not necessarily something that people would expect tomorrow, but when you consider the overall environment, this is something where looking on the chart, this has been a kind of 6 to 8 month level, but you can see a level here from April of 2023, and again, if we see downside in the 10-year, that is likely to be more of a positive for the Russell, more of a positive for value, and things like that. So I think this also fits into the thesis of what kind of seems to be emerging as a potential sort of sequence of events in front of us. Now, last week we talked about materials. We talked about how the fact that the Fed, the XLB, the materials essentially here, with the Fed moving toward rate cuts could be interesting. They actually did outperform last week. They kind of followed similar to what we were expecting. The Fed was more dovish in many ways than many people might have expected. And so I think materials here, this is actually an idea we did on TradingView today. If you want to check it out over on TradingView, we actually have if you go and you look at these on TradeStation, we look at this. Basically, this is the main things I'm looking at in the weekly. You can see this basing pattern. And so anyway, and the key things to me here are the fact it's kind of making this basing pattern. That's the one thing that's important to me. And then the fact that it's a sideways movement, the falling trend line, it breaks. And now basically, if we kind of hold this level here, again, now we're on, say it holds here and doesn't do anything else for the rest of the week, that would be a record weekly close. So something like this, also is in that spot where if it kind of closes here at this level above the previous record weekly close from the week back here at the end of March, closing there could give a confirmation, and people might look for this to behave the same way that healthcare did. Essentially, record weekly close, maybe a chop down or maybe not, and then continuation. So right now, from my perspective, in materials seem interesting. They would benefit most likely. The kind of overall common sense thinking is that rate cuts are good for materials. I mean, that is in many ways the playbook that a lot of people have. So this is something people will be looking at. So I want to point that out. But the other thing that's interesting about it is these also have not really broken out relative to 2022. So we could be at a spot here where people actually look for this to maybe really start to clear, from that bear market that we had back there when the Fed started cutting rates. So from my perspective, this is something people might actually look to say this has some potential to expand higher, especially given the precedents that have now been set by the industrials and the financials, which we're going to be getting to. So XLB, this is something here. It's not that far away from 100. So I think this is something, well, it is actually about, it's about 7, 8 points away from 100. But the thing is that if it does clear there, people might be looking up toward triple digits as something that's not, totally out of the question. Now, XLC communication, we kind of have our big three for the mega caps. We have XLC communications, XLK technology, and XLY consumer discretionary. Those are the three that really have the mega cap growth names. They follow the NASDAQ more closely. Of those three, the XLC has behaved the best. It pulled back the least. It's been the tightest. It's shown the least amount of selling pressure. So this is interesting here. It's kind of sitting at this 88 level. But I also think this is one that when we look at the XLC, I want to just mention that this has kind of performed the best, and it's kind of trying to, it's right back to this high from where it was back in 2021. So let's kind of watch how this, if this can sneak out to new highs. I think this is it's interesting when you consider some of the kind of things in this, things like Meta are, economically sensitive because of things like advertising, things like, Google in the same sort of spot. So it has more of a sort of cyclical, aspect to it than a lot of the tech of the other areas, because in some ways it's crazy, but consumer discretionary is like Amazon is really not as much of a cyclical stock now in some ways as something like Meta based on advertising. If we see the economy starts to show a higher GDP growth, that can boost advertising, and then you got Meta and Alphabet in there as major, advertising names. And in the old days, these guys would have been in the consumer discretionary, but that's kind of unimportant. I just want to mention here that this is kind of stuck at 88, but this is one where I think it's stuck there. We have to realize, but it's also the one that has performed the best of the mega cap sort of sectors. Now, energy XLE. This is very interesting to me. So we had some turmoil in the Middle East and some situation in Libya with something with their oil going offline, and so that is one of these things that has given something of a boost to energy here. But this is one to me that has had, when we look at it, people might be noticing these just lower weekly highs, and the fact that really not any kind of significant bounce in this. This thing has not made a 52-week high really since like April. The rest of the market, many other names, the short term is much stronger than this. From my perspective, what's really most interesting to me here is the fact that we might actually see this turn into a false breakout on the weekly, because basically the high from last week was 91.85, and if you look at it today, I'm sorry, 91. Let me make sure I get this level right. 91.85. So basically today we pushed above it and we didn't stay there. So this is something that might turn into a false breakout, which is a bearish signal. So I want to just kind of point that out here. But XLE, it continues to kind of follow this pattern of weakness that we have mentioned before. All right, financials on the other hand, basically a weekly record weekly close here. And from my perspective here, when you look at something like this, we talked about the way that again, very, I mean, limited pullback. The market getting slammed last month, and this thing couldn't even go back to its lows from June. It basically made those high, a very tight pattern here. So I think right here, once we saw that push here on this week, again, it had that record weekly close right here, the week that began August 12th. And what did it do? It sat and pushed and it punched higher. So this is again kind of what I'm saying about something like materials. If you look at the playbook the financials have given us here, something, it's interesting to now look at where materials are at this moment. So financials here are kind of in a period of having cleared, and people might be simply looking for very limited pullback, consolidation, and then kind of more upside potentially in something like financials, given the fact we have this weekly breakout. And I also think it's important to realize that if you just consider, the fact that the overall market, has things that, like I said, large participation to the upside, new stocks making new 52-week highs, all those things. If you're looking to put money to work in the market, the big institutional grade kind of respectable sectors that people might be putting money into, something like financials. There's an argument for something like that here, and I think that this is an area we have to kind of realize is that financials could replace to a certain extent the mega cap growth. It has that potential to, major names like Berkshire Hathaway and Goldman Sachs and stuff. These are like the sort of stocks where people looking to redeploy to benefit from a different kind of interest rate environment, a different kind of market. They can feel comfortable in the large, financials. All right, industrials also almost identical chart. And from my perspective here, this kind of tight, narrow consolidation. You have the high from back here in early July. This might just kind of sit here a little bit, but this is one here where when you look at the weekly sort of discipline we're trying to use here, this is something where short-term weakness could be met with buying. All right, XLK on the other hand looks very similar to the Qs, very choppy, potential. When we look at the fact that it made a lower high here at this level from back here in late July, trying to hold the low from last week, but there's a risk of something like that of this breaking, and so from my perspective here, this is a very, from any kind of long-term perspective, if anyone, especially if you're looking to be on the more of the long side, this is something which has significant sort of potential of risk because it's range bound and it has this range with potential to fill in all these sort of spaces here. So I think this is that's my view of something like this here. The lower weekly high, this high, and people might want to basically be seeing that there is space here, which may pose a certain degree of risk if we get under that low from last week. Otherwise, it's a tight range, and I think that's important to then look beyond, and this line here might actually lose relevance, and we could simply move into this range between essentially, 220 and 227, basically that low and the high. So last week's candle, if we can stay inside of it, it could be an important range with whichever way it goes on either side, kind of determining the future direction. I would just note that, like I said about the apparent rotation, it might be consistent if we are seeing the strength in cyclicals and in the Russell. That would not be favorable for this, and that would be more consistent with this resolving to the downside and money shifting to something like the small caps and financials as this spends some time in a range bound situation. All right, XLP, we had kind of talked about the same thing, how it was just kind of pushing, extending, and here we are basically clearing new all-time highs. And this is, this sort of thing, when something clears these highs, it has a tendency to kind of melt higher and for money to keep moving into it. So I know that things like consumer staples are not very interesting, but at the same time, we now have a long-term sort of breakout on the weekly chart in this area. And so I think this is also something here where, narrow pullbacks, 2 to 3 days of red could turn into buying opportunities. So that's kind of how we see that this sort of pattern. Again, we had that, what did we have? We had the highest record weekly close. And then, in fact, the record weekly close, you can see right around here. You can see we started flirting with it, and then you can see the acceleration after we started getting those highs once we cleared that level. XLP. XLRE, Real Estate Investment Trusts. This is one we also talked about, was in this tight bullish ascending triangle, and then we got that breakout last week. And now, people might want to be thinking up here to this level of August 2022. I mean, this real estate investment trust is something that, is an interest rate sort of trade. I'm going to take off this line because it's no longer really relevant. And now the lines you might want to, be aware of, if anything, are just kind of the breakout line at 42.21, but then, have eyes on up to that high from August of 2022. This is something here with the Fed where it is, where it would be, these things kind of go together. The idea of real estate doing better and the Fed being dovish. Those things talk to each other. Those rhyme, in terms of reasoning. The other thing that's interesting is, I'm not sure if it's true at this moment because I haven't checked the pricing today, but as of Friday, real estate was the top performing sector in the second half. Just saying, it's kind of interesting. So we saw the second half, and then begin in July. About 2 weeks into July, we got that really nice inflation report, and the Russell exploded higher, and now we're seeing other areas that benefit from similar trends like real estate outperforming. So these things are very interesting, and they seem to be kind of giving us empirical evidence. These are kind of pieces of evidence that this is more of a bona fide rotation that's underway. Now, XLU utilities, there's also something here that's had similar sort of patterns. And I would point out on this one that people might want to be paying attention to that high also from August of 2022. This is also something that benefits from potentially from low interest rates. At least that is your classic playbook. So something like utilities here, people might see space to the upside. Um, Healthcare has pretty much broken. I mean, this has been a pretty clearly established breakout at this point. And, again, people might look for some tight consolidation. They might want to also, sometimes with things like this, the daily charts kind of kick in. So if you look at something well, I'm sorry, that's the wrong chart. XLV, we might want to be looking at something like the 10-day simple exponential moving average, or simple moving average, or the 8-day exponential moving average. There's different sort of patterns that you can use. People might even want to be looking for a level down to like 154 on something like the consumer staples. You have similar sort of, I haven't looked at the dailies on these in a while, but people often look at something like the 8-day exponential moving average. If you want to watch market trends on Thursday at 2 p.m., we will actually share our workspace that kind of shows you how to track those shorter term daily patterns. It's not what we talk about on Mondays. We talk about weekly on Monday. We do more of the daily stuff on Thursdays. But wanted to just mention here that these are the sort of things where, short term, periods like, waiting for the one red day. Look at these green, 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 buy the red, and then potential continuation. So you have just green, and then people looking for, a string of green days, one or two small red days. Those can be the ways to be thinking about when you have these weekly breakouts of how to follow them. XLV, I just mentioned. XLY, consumer discretionaries. So this is very similar to the NASDAQ. And, I think at this point, we have also this level here from that last, Monday, that week of the end of July, early August. I think we actually look at this on the daily. Let's look at where this stands against that August. So this is July 31st in August. This is just quickly on the daily. So you can see here that this level has some resistance here. From my perspective, this is just kind of a very tricky sort of one because this had a very significant pullback, a pullback more than any others. And people can also see very much of a range bound sort of environment here. So there's a lot of levels to look, but people might be looking simply at this point for some kind of filling and consolidation, and even looking at maybe filling in last week's candle to a certain extent. I do think it's interesting if you look because we're seeing, Amazon and Tesla. We did a trading view idea on Tesla based on a few different patterns here, but essentially, I don't have it on this chart, but this is something of a potential bearish flag. I was also looking at some weakness in something like Amazon. This is the daily chart we're looking at. You can see this level from right here, the low on August 1st before it gapped down on earnings. This was the worst gap. This is the biggest drop in Amazon in over 2 years when it fell that day, and basically had light guidance, light revenue. Again, hitting that went right back up and tested that high. And so this is something here you can see how it's been lagging the S&P 500. So these are the two biggest members of XLV, and then all the outperformance has been stuff like the home builders, like Lennar, and we talked about DR Horton. These are actually consumer discretionaries, and you see now some strength in some of these other consumer discretionaries, like the cruise ships, like Expedia, that we actually did a trading view idea on, which is interesting because it's in this really tight range. It has this gap here. The last earnings report showed some potential of a kind of turnaround. So this was one that was kind of interesting for us. Some levels here. It's very much in this range bound environment. People might want to be looking up, seeing this gap and things like that. So that's Expedia. But again, that's a consumer discretionary. So we're seeing the consumer discretionaries kind of benefiting um, from one extent. The smaller names benefiting, but the problem is 35% of the consumer discretionary index is Tesla and Amazon, which have these other potential issues. And the funny thing about them is they're really not consumer discretionaries the way that you would think about them. Yes, Tesla's an automaker, but it's in many ways a high multiple growth stock, almost a tech stock. And Amazon with AWS is essentially, in many ways a tech stock as well. And then the other issue is that as the aspect of it as a consumer discretionary retail stock is relatively expensive compared to some of these other names like a cruise ship or like a home builder or like a retailer. So I think that's just the way to kind of think about it right now is that the consumer discretionary index itself, I think, is very just mixed, and it's not actually exactly what you would think about it. It's so dominated by these two big names. So those are the main things I wanted to talk about. But I think overall, the main thing here is that there has been evidence of this sort of rotation underway. It seems to be, it happened last week. It seems to be getting validated by what we're seeing in the price action today. I think this week we want to be focused on Nvidia on Wednesday, the GDP revision on Thursday, then the long holiday weekend. But essentially, at this point, I think it's one of these things where the news in many ways matters less than the overall process. And what is the process? The process is of interest rates coming down. And from what I can tell, an improving sentiment overall across the market and across the economy. And we could be at a spot here where people do start to be kind of Main Street gets more invested and more interested in the stock market overall. So, many ways the Bears tried in early August, they lost, and now it might be difficult to see much more break to the downside. So I think on the S&P, the last thing I'll just do is reiterate this level from back here on August 1st. That, in my view, is the thing we want to watch and go back and remember these daily patterns that we saw of these, rally, tightness, continuation. So rally, this could in the end look like tightness and then the potential for continuation. So those are the things that are on my mind here. Thursday afternoon, we'll see you again. Market trends. Have a great day, everyone.